Welcome! In this tutorial, I'll guide you through SpeedAlyzer's valuation dashboard, located in Step 3 of the Deal Inputs page. This dashboard is a foolproof way to estimate a property's value and calculate your maximum offer price based on your investment goals or acquisition criteria. With a single click, SpeedAlyzer can generate a data-driven offer price for a self-storage facility or multifamily property using any of the 5 most commonly used commercial valuation methods. We'll go through each method, starting with the simplest and progressing to the most dynamic. By the end of our first valuation exercise, you'll have a clear understanding of how the valuation dashboard works. If any of these methods are unfamiliar to you, I encourage you to research them to gain a better understanding of how they are calculated and the advantages and disadvantages of each. Before getting started, make sure you've completed steps 1 and 2, including modeling any creative financing or equity waterfall structures on the investor returns page. Tutorials for these steps are available on our iHeartCRE YouTube channel, linked in the description below. I've already completed these steps for this tutorial, including modeling 3 different equity distribution waterfalls to evaluate which scenario offers the best balance of investor returns and offer price advantage in the valuation dashboard. This deal is for a multifamily asset, but keep in mind, the steps are exactly the same for self-storage. SpeedAlyzer can analyze commercial properties of any size. For this property, the seller is asking $12.1 million. Let's find out if it's worth making an offer. Let's get started. Let's go ahead and enter our minimum goals now. For IRR, let's set the target at 15%. For AAR, we'll aim for 18%. For the equity multiple, we'll target 1.9x. And for DSCR, we'll keep it at 1.2. Keep in mind, these targets are for demonstration purposes only. Be sure to adjust them based on your own investment criteria. Optionally, if you have investors and have configured a waterfall equity model on the investor returns page, you can select one of those models to include that criteria in your valuation. Otherwise, you can leave the default setting at project level. We'll cover these settings in more detail shortly. Next, let's activate the returns ticker to monitor the actual numbers in real time. While the goal monitor uses color coding to show whether we're on track, the ticker displays the exact return metrics for IRR, AAR, equity multiple, and DSCR, updating automatically as we adjust our analysis. This makes it easy to see what's driving any red or yellow indicators in the goal monitor. Let's start with one of the most common valuation methods, the capitalization method. In this approach, SpeedAlyzer uses your desired entry cap rate to calculate a property value. Each valuation method includes a blue input field and a green field that displays the current value. If you know the going cap rate for similar properties in this target market, enter it here. Let's assume that the prevailing cap rate is 5.65% and input it here. The green field currently shows an entry cap rate of 67.68%. Ignore it for now. That percentage is based on the $1 million placeholder in the offer price field. Now let's click the Value Using Cap Rate button to perform a proper valuation. SpeedAlyzer has automatically calculated an offer price that aligns with our 5.65% entry cap rate. The maximum offer price is now $11,979,226, about 1% below the seller's asking price. You'll notice the percentage in both the input field and the green value field now match. Our color-coded goal monitor shows all green, and the returns ticker numbers look solid as well. Based on this analysis, at the desired cap rate, we wouldn't want to offer more than this calculated price. When negotiating with the seller, you can manually input an offer price and get instant feedback. For example, let's say the seller won't budge and asks us to come up on price. Let's start by inputting their asking price of $12.1 million. Our IRR has been flagged yellow in the goal monitor. According to the returns ticker, our IRR has dropped below our 15% target, coming in at 14.9%. That means we need to reduce our offer price just enough for the IRR to increase and the indicator to turn green again. One way to do this is by using the plus and minus buttons, which let you adjust the offer price in small or large increments. You can adjust the increment amount by clicking the gear icon. A window will appear showing the current setting, which is $50,000. Let's change it to $5,000. This sets the amount by which the offer price will increase or decrease each time you click the plus or minus buttons. Now, each time I click the minus button, the offer price will go down in $5,000 increments. According to the returns ticker, our IRR is now 15.01%, and our maximum offer price is $12,065,000, about $86,000 higher than our original offer. The entry cap rate is now 5.61%, slightly below our original 5.65% target. There's an alternative and faster method we can use as well. We're skipping ahead a little, but for good reason. Let's reset the offer price to the seller's asking price of $12.1 million. Rather than adjusting the offer price manually, we'll use a different tool found within the DCF Method section. Currently, our IRR monitor is flagged yellow. From the drop-down menu found below the goal columns, select the flagged metric, in this case, IRR. The green field below shows our current IRR is 14.9%. Click the Value using IRR button. SpeedAlyzer automatically calculated an offer price that increased the IRR up to our minimum 15%, changing the IRR monitor from yellow to green. The new maximum offer price is $12,067,297. Either approach works. It just depends on your preference and how quickly you need to respond during negotiations, especially if the seller is on the phone. Remember, this is the maximum offer price based on your benchmarks. Don't exceed it. Always make an effort to negotiate a lower price. These adjustment techniques can be used with any of the other valuation methods in the dashboard. Before we move on, if you need help researching cap rates for your asset type and class, SpeedAlyzer includes an AI assist tool. Just click the AI button to instantly generate a custom prompt based on this property's data. A window will appear confirming the prompt has been copied to your clipboard. Click OK. Then open your preferred AI platform or open ChatGPT by clicking the ChatGPT button. Paste the prompt into the chat input box and click the Send button. The AI will suggest a range of cap rates based on its research, which you can use as a guideline or combine with your own analysis. This should give you a general idea of how the dashboard works. Let's just look at a few different methods before jumping into the more complex, discounted cash flow method. Next, let's try out the gross rent multiplier, GRM method. Our current year 1 GRM is 7.27. In this scenario, let's assume the standard GRM in this market is 7. We'll enter 7 as the desired GRM in the dashboard and click the Value using GRM button. SpeedAlyzer calculated a maximum offer price of $11,619,713, about 4% below the asking price. Our return metrics in the ticker are well above our minimum goals, giving us plenty of room to negotiate if needed. Next, let's explore the price per unit method. In multifamily analysis, this is often referred to as the price per door method, which reflects the average value assigned to each residential unit in the target market. If this were a self-storage facility, this section would display the price per square foot method instead. We'll come back to that shortly. Our current year 1 average price per unit is $86,072 based on the current offer price. Let's assume we're not willing to pay more than $85,000 per unit. Let's enter that value into the desired PPU field and click on the Value Using Per Unit Price button. Our calculated offer price comes back at $11,475,000. All our metrics are in the green, indicating a solid offer price. What if our max was $90,000? Let's try that number. Our max offer price is now 0.4% above the seller's asking price, and our IRR indicator is flagged yellow. Let's click on the Value Using IRR button to resolve this. The new offer price gets us into the deal at $89,392 per unit, which is still below our $90,000 ceiling. With the magic of editing, I'll switch the asset type to self-storage to quickly highlight the difference. Notice how the price per unit label changes to price per net rentable square foot. Now you can enter a price per square foot in the desired NRSF field and calculate an offer price. For this tutorial, let's switch back to multifamily. But remember, this dashboard is flexible and works just as well for self-storage valuations. Finally, let's dive into the discounted cash flow, or DCF method. Simply put, this method estimates a property's value by forecasting the cash it's expected to generate throughout the hold period, including the proceeds from sale, and converting that future income into today's dollars. It's a popular approach because it reflects investor expectations and provides a forward-looking view of performance. What makes SpeedAlyzer's DCF method especially powerful is its full integration with both your minimum return goals and any equity distribution waterfalls you've modeled on the investor returns page. We've already set our targets for IRR, AAR, EMX, and DSCR, and modeled all three waterfall structures to compare different strategies. If you're not using outside investors, you can select the project-level option, which bases the valuation solely on overall deal performance instead of an investor distribution structure. Let's get started. From the drop-down menu, select the goal metric you want to base your valuation on, either IRR, AAR, or EMX. Each option corresponds to the minimum goals we set above. Let's go with IRR. Next, since investors are participating in our deal, let's choose one of the three equity distribution waterfall models. Let's select Waterfall A for our first valuation scenario. Once selected, the goal monitor and returns ticker will update to reflect your chosen model. The end of the returns ticker displays the selected model. In this case, Waterfall A. Remember, if no outside investors were involved, we could select project level instead. At the bottom, there are two fields that display values based on our selected metric. With IRR selected, one field shows our current IRR of 14.47%, based on the offer price displayed above. The other shows our minimum IRR goal, which is the 15% we set earlier. Below, you'll find the valuation button. Its labeling reflects the selected metric, so in this case, it reads Value Using IRR. For example, if we select EMX, it now reads Value Using EMX. Let's run through a scenario using the seller's asking price. I'll reset the offer price to match their $12.1 million ask. Our goal monitor flagged both the IRR and AAR as yellow, and the returns ticker confirms these metrics are below our minimums, with an IRR of 14.38% and an AAR of 17.8%. At this offer price, the deal doesn't pencil out for our Waterfall A structure. Let's see if we can find an offer price that resolves our two yellow flagged metrics. Choose one of the yellow metrics, either IRR or AAR. Since IRR is already selected, we'll click the Value Using IRR button. SpeedAlyzer calculated a new maximum offer price of $11,875,662, nearly 2% below the seller's asking price. With this adjustment, both IRR and AAR are now in the green. Let's switch to Waterfall B. With Waterfall B selected, everything is in the green, and this waterfall structure boosted our investor returns, That's a boost from 15% to 16.26% IRR. Without changing the offer price, just by switching from waterfall A to B. Next, let's try the straight split model. I'll select the straight split option. Our IRR is still in the green, though it dropped from 16.26% under waterfall B to 15.59%. Based on that, it looks like waterfall B would yield a higher return for this deal. Now, what if we didn't have an investor and selected the project level option instead? In this case, we would see the same IRR as in the straight split model. That's because the equity contributions and profit distributions are perfectly aligned. So each party's IRR matches the overall project return. However, if the contributions and distributions were not aligned, the returns would be different. Your analysis is fully dynamic. You can modify any part of it at any time, including fine-tuning your waterfall models, and then rerun your valuations. If any metric in your goal monitor throws a yellow or red flag, you can simply select that metric from the drop-down menu and click the valuation button to calculate an offer price that brings it back into the green. This approach works with any of the monitor's return metrics, making it easy to quickly realign your valuation with your return targets. For example, let's enter a desired cap rate of 5% in the capitalization method and click the Value Using Cap Rate button. Now, both IRR and AAR are flagged red. Let's select AAR from the drop-down and click the Valuation button. AAR is now back in the green, while IRR remains yellow. This time, we'll select IRR and click the button again. Now, all our metrics are green. Other decision-making metrics you can review include the purchase metrics and deal metrics found below the dashboard. Also, a full range of analytics can be found below the cash flow summary on the pro forma page. The SpeedAlyzer valuation dashboard can assist you in determining a justifiable offer price based on various valuation methods. Remember, these valuations rely on numbers you input into the analyzer. If the numbers aren't working or the seller isn't budging, you can easily revisit and refine your assumptions, model better loan terms, or explore creative financing options. Yes, SpeedAlyzer even offers a creative finance model that can replace or complement your existing bank loan to salvage a potentially stalled deal. You can also factor in refinancing during the holding period, which can impact the valuation outcome.
We interrupt this tutorial to bring you an update. We've added a new button to the valuation dashboard on the Deal Inputs page. If you're using the property tax calculator option in the expense estimator section and you change the offer price here, click the Send to Calculator button to send the new offer price to the calculator's purchase price field. A green check mark will appear when both price values match, so you know your numbers are aligned. This button also prevents any circular calculation issues. Now back to the tutorial.
Well, this wraps up the tutorial on SpeedAlyzer's valuation dashboard. We trust that our streamlined entry process will accelerate your deal analysis. After all, minutes matter in real estate. Make informed decisions fast with SpeedAlyzer. To view more tutorials, visit our iHeartCRE YouTube channel and subscribe for further insights and updates.